Oh, look how nice and fresh this looks. And I feel good, and I'm ready to teach you about some indicators. Let's go. Alright, so today we are talking about the moving averages. This is one of the basic indicators that you will use a lot. In moving averages, we have three different kinds. We have the simple moving average, the weighted moving average, and the exponential moving average. All three of them are calculated a little bit different. I don't usually use the weighted, I use the simple and the exponential the most. All the simple moving averages is that it takes the calculations of the closing price over a fixed period of time and it gives you an average price. So I use two different ones, the 90 and the 180. With that being said, if I am on an hour time chart with the 90 lanes, it's giving me the average close price over the last 90 hours. Or if I am on the minute chart, it gives me the closing price of the last 90 minutes. So typically the longer the number, the slower it moves. And the faster the number, the faster it moves. But these are great because they can filter out a lot of noise. And with the exponential, it pretty much takes the high, the low, the close, and the open, and it does a little bit more of a formula. And with that formula, it's a little bit more sensitive. So I like to use the 30 exponential moving average, the 90 simple moving average, and the 180 simple moving average. So with this, we're gonna say that 30 EMA is the faster moving average. The 90 SMA is our mid-range average, and the 180 is our long-term average. Now remember, indicators are not always 100%. Nothing is 100%. Nothing is even close to being 100%. But what they do is give us an opportunity to help us figure out what is the best move for us. Now, if you remember in the Thinkorswim platform setup video, we went ahead and added indicators. But just in case, we're gonna just start over and do it again. So first, we're gonna go ahead and click up here on the beaker. We are gonna add 3 indicators to this one. And if you already have it, don't worry about adding it, but just in case, we're gonna do it now. First 2 is gonna be the simple moving average and add it twice. And the third is the moving average exponential. Now we're gonna change these settings a little bit, and we're gonna change this first one to 90. And I'm gonna change the color to a magenta. The reason why I'm changing it to magenta is 1, you can see it better, and 2, it's what I know to be 90 on all my charts. Next, we're gonna change the second one over to 180. We're gonna change the color to green just because this is also what I'm used to. And then on the moving average, we're gonna change this to 30. And we're gonna leave it at the blue. Now all these numbers are ones I personally like the best. I've tried out many different ones, and these are the ones that I just like. We're gonna go ahead and hit OK. And as you can see, we have 3 lines plotted on this chart. With moving averages, we have what is called a crossover. They give us bullish and bearish signs. If a faster moving average crosses over a slower moving average, this is typically a bullish sign. If a faster goes under a longer moving, it is a bearish sign. We can use these to help us find entries and exit points for when we trade. I'm going to zoom in a little bit on TIVA here. This is the 1 hour time frame. Now, if you remember, the blue is our faster one, the magenta is our medium, and the green is our longer term. And when they are in that order, that creates the most bullish signals. As you can see here, we got the blue, the purple, and the green. And overall direction started going up. Remember, all of these moving averages are also potential supports and resistances, and that is why we want to trade when the price is above them. Otherwise, if one of those is above us, that is a potential resistance. Right here, we had that fast moving average do the crossover, and this is our first bullish signal. Then 2 days later, we have where the purple one cross over the green, and this is our second bullish signal. Now remember, indicators are not meaning to buy right away. All they're doing is saying, hey, look at me, I might move, but that does not mean to buy right away. We still need to make sure that the overall direction is going on. As you can see right here, the price is above the moving average, and it started to push up, and it pushed up very well, like 9% in that one day. And it came back down, and it ended up testing this as a support, that dynamic support I taught you about earlier. And as days went on, it just kept pushing and kept pushing. And the best places to typically buy is in the support range, here and here. And as you can see, it kept pushing and it kept pushing. And finally, when it broke that pattern, and it came down, what happened? It started selling off. In this area here, we have 3 different crossovers, all being a bearish sign. So you would not want to go long here. And this might be an area where people are preaching, buy the dip, but it's only a dip if it's going in that direction. If it's a downtrend, it's not a dip. it's a downtrend. Fast forward, as you can see, it started going down. Now we did have a false breakout here, and this is a perfect example to show how indicators are never 100%. They are here to help us try to predict the best outcome. Now let's take a look and see what's going on in this general area. First, right here, we have a fast moving over the midterm. This is a bullish signal. However, I wouldn't have bought here just yet because of this green long term. It could have been easily a resistance, but in this case, it was not. And it pushed very well. Push allowed us to get our moving averages later on in line, and it came back and it started to test them out. As we can see, it starts holding the support. It's above all three lines and it has room to grow. Later, it comes back down. It tests this as a support. And if you were to get in this area, it's not a bad entry. I honestly would have probably gotten in this area as well. We can see it ended up consolidating and not pushing. And as it started selling off and getting into the areas underneath, this tells me that it's broke that support and it's turning into resistance. Bail out, cut your losses, and move on. And now I'm just gonna go ahead and zoom out. And again, we see right here that crossover we mentioned earlier, the huge push. It turns bearish, it comes back down. This was a false breakout, which is okay. It happens, you have to get used to it. Then we have another fantastic run. Once it holds the support and we see all the moving averages is showing bull. Once we have the crossover showing bearish, it sold off aggressively. Again, with this sell-off, we don't buy the dip until we see some kind of confirmation, which would have been in this general area here. This would be our dip buy because we start seeing support on the moving averages. Now this is great on multiple time frames, and let's go ahead and break this down intraday. Now if we see on the same TIVA chart on the intraday, look how aggressively these moving averages are pointing down. There is no crossover, no indication on that there's going to be any kind of reversal, and that's what happened throughout the day. It started selling off pretty bad. It tried to come back over here, and as we can see where the fast went over the midterm, but what happened? It did not last. And honestly, it would be a bad time to buy. We still have right here this long term over our head. Sold off aggressively, and it did not show really any signs of a reversal until all of a sudden we have all of these averages showing as a support. Now let's go ahead and pull up another example. Here is Piton. I'm going to go ahead and just zoom in a little bit. Right here we have the first crossover, and right here we have a second crossover. Also, all of our candlesticks are trending above all of these lines. These lines are excellent support. As it comes to bounce here, right here would have been a fantastic entry. It showed a support here, and then it showed that it's going to start pushing. Although it did not keep pushing after, we have to know where our supports are, because sometimes they will come right back down and test, and that's what happened. We have 1, 2, 3 different supports it can hold on to, and it came back and it tested here. If it was to have broken this area, this would have been a sell-off, and we would want to go ahead and cut our losses. But it came back, it tested, and it ended up pushing. In this instance, it pushed 3%, which is a fantastic trade. As you can see later on, the candles start falling underneath. As it starts falling underneath, all the moving averages start to become a resistance, and this is where it becomes bear. Now here we have our first crossover. This would not have been an ideal entry. You could get in understanding that you have a potential resistance here. If it was to be rejected and came back down, you want to cut your losses quick. However, in this case, it did actually keep pushing, and it was a fantastic entry for a reversal. Go ahead and pull up one more. This is a fantastic example of using support and resistance on the moving averages and why being patient is so important. Here is TNDM. Pretty crazy ticker going on throughout the day. Let's go ahead and just zoom in on the very beginning. We can see all of our moving averages are showing a bearish sign, and it sells off, it comes up, it gets rejected by the midterm. It sells off, it comes up, it gets rejected by the long. It sells off, but look what happens in this area right here. And right here, all of a sudden, we are starting to trend over all of these moving averages, and they are becoming a new support. Once we get these bullish signals, again, it does not mean to jump in right away. A lot of times we want to see some kind of confirmation or that pullback confirmation, which happened right here. This is the pullback, and right here we start seeing a support, and it starts to trend back up. Right in this general area would have been a fantastic entry. And as we pull forward, it did pull back one more time to test, and then it really pushed throughout the day. Why was it able to push? Because we got rid of all of those resistances and they became a support. And as we zoom out, look at that entry. That was a fantastic entry. And you can see where all of these moving averages at one point throughout the day was some kind of support and some kind of resistance. And if you missed that support and resistance video, I'm gonna leave a link right up here. Make sure you go check that out. Now, I hope you understand a little bit more about the moving averages and how they work, why they are so important, and how you can use them to benefit your trading. You always have to be patient with your trades and just don't jump into something because it looks good, because typically there is some other factor that may be going on that you don't realize. I want you to become an alpha bull, strong and independent trader. One that does not have to worry about the opinions of others and trade off of what they feel is best. You always need to do what is best for you. With that being said, I am not a financial advisor. All the advice I'm giving to you is based off my own personal experience and my own growth as a trader. I want you to succeed in life. I want you to be the best person you can be. I want you to be able to provide for your family, go on those vacations, give them the life that you deserve. If you enjoy these videos, give me that thumbs up, hit that subscribe button. Let me know what you think. Add those comments below and go and make today a great day.